Hey guys, welcome back to the channel. My name is Michael Studebaker, and today we're going to be going through how to analyze stocks for beginners. And for those of you who are interested in individual stock investing but don't know what to look for when researching a company, if you haven't already, please subscribe, like the video, and hit the notification bell if you want to get notified when content comes out. Now, let's get straight to it. The website I use when I'm analyzing a company and their stock is finance.yahoo.com. It's free to use and has all the information you need on there. One of the first things to look out for when researching a stock is to look at the volume of the stock that's being traded. Volume is the number of shares that is being traded that specific trading day. If there's a high volume being traded, which is typically any stock trading over 500,000 shares a day, that can be seen as a good thing because that means it's relatively easy to sell shares if needed. If the stock has less than that in volume, that is considered low volume, making it harder to sell, and that's usually a red flag. Next, we'll be looking at market cap or market capitalization, which is referring to the total value of a company's shares of stock. You can calculate this by multiplying the price of a stock by how many shares there are in total. The market cap gives us an indication of the size of the company and can be used to compare the size of the company to another one. If the market cap is over $10 billion, this is considered a large cap company. If it is between $2 to $10 billion, it is a medium cap, and below $2 billion is a small cap. Moving on to PE ratio, which is price to earnings ratio. This shows what the market is willing to pay at the current date for a stock based on its past or future earnings. A high PE ratio could mean that a stock's price is high in relation to its earnings, making it overvalued. If it has a low PE ratio, this could indicate that the current stock price is low relative to its earnings, making it cheap or undervalued. To calculate PE ratio, you divide the market price of a share by the earnings per share. Another thing to look at is EPS, which is earnings per share. This is a figure indicating how much in demand their products essentially are, which is calculated on a quarterly or annual basis. This is calculated by taking the quarterly or annual net income and dividing it by the number of shares there are. A higher EPS indicates higher value in the company, as investors will pay more for a company's shares or products. A lower EPS indicates lower value in the company, as investors aren't willing to pay more for a company's shares or products. Usually higher value than 25% is considered a high EPS. You can also look at the beta value, which can tell you how volatile a stock is. On average, for normal volatility, the value should be at around 1. If it is higher than 1, that means the stock is very volatile, which you should take into account before buying or trading. Some advice would be to not look at the stock price increase or decrease, but rather look at the percentage increase or decrease. If the stock you are looking at happens to be a dividend-paying one, make sure you find the payout ratio for it. This is going to tell you how much the company gives in the form of dividends to its investors. A value of 60% or lower is typically good, as you also want them to reinvest some of their profits back into the business for growth and to make sure they're not in a dividend trap, which is when they're paying out in dividends more than they make in profits. You can calculate payout ratio by taking dividends per share and dividing it by earnings per share. Next thing you gotta look out for is the ROI Capital, which is return on investment capital. This is basically a profitability ratio, It measures the return that an investment generates for those who have provided capital, which are shareholders. To calculate this, you would take the company's operating income divided by the invested capital. A value of 8% or higher is good. When looking at the income statement, the main thing you need to watch out for is if the total revenue grows or decreases over the years, and to see if the net income grows or decreases. Then when you move on to the balance sheet, just make sure if the total assets are going up, then it's good. If the total liabilities are lower than the total assets, then it's good as well. Lastly, you should check to see if there are any news about the higher-ups of that company to see if they sold a lot of their shares or are keeping them, because if they did, that is a red flag as it shows they don't have any faith in their company. This is just a general analyzing guide for people starting off, so there will be aspects not included in here for intermediate investors. With all of this covered, if you research all these aspects of the stock, you should be good to go and very informed of the company, allowing you to make an educated choice to buy the stock or not, and which ones you should invest in. My email is there if you guys have any questions, feel free to ask. So I hope you guys enjoyed the video and found it helpful. If you did, please subscribe, like the video, hit the notification bell if you want to see more content like this. I hope that this will get you guys started on investing and allowing you guys to make informed decisions regarding which individual stocks to buy and which to sell. Remember to know your field of competency and don't invest in a sector that you don't know anything about. Consistency is key and hard work pays off. Thank you guys. I'm Michael, and I'll see you guys in the next video.